Hi, this is PR Sundar. Last week I posted a video. Nifty will touch 7,500 first or 15,000 first. If you have not seen that video, you can click the link here to see the video. Many people ask me one question. Sir, you said 7,500 will not come first, 15,000 will come first. Why the market is falling 100 points today? See, markets don't go in straight line. If the market goes in straight line, everybody can make money. So markets will be going up and down. There will be intermittent corrections here and there, So market can even fall to 9,000 also. But I did not say that market will not fall. What I said, two important things. What I said, one, Nifty will not touch 7,500 first. Nifty will touch 15,000 first. That's number one. Number two, I have not given the time frame. It may happen 1 year down the line or 2 years down the line. So please be very clear in understanding of what I am saying. There were too many negative comments and people could not believe what I said. March month markets crashed, April month market retraced, and May month markets consolidated. At the end of May, Nifty was at 9,500. I just asked a question, what is going to happen in June? And believe me, 99% of the respondents said market will fall. That 1% of the people, they said Nifty will go to 10,200 and after that it will fall. But what happened in June and July? Now the market is trading around 10,700 to 10,800. So that is why in stock market there is a saying, consensus is dangerous. Look at the consensus. Most of the people are bearish. They say, sir, economy not doing well, Corona lockdown, no business is going on, Q1 result will be bad, Q2 result will be bad, and all those things. I always say just for fun, if for every negative news, if the market has to come down, Nifty should be trading around zero only. And that is why there is a saying in stock market, bull market always climb the wall of worry. As long as there is a problem, the people will take measures to solve the problem. And as and when problems are being solved one by one, market will be moving higher. One of the negative comments was that, sir, Nifty PE ratio is already at 28. Historically, 28 PE ratio is the top of the market. Market uniformly fell. Nifty PE ratio historically between 15 to 28. So 15 comes, we should buy. But let me tell you, when the Nifty PE ratio comes to 15, nobody will dare to buy. And tell me how many people bought when the market hit 7,500. So the technical people will always tell, if the market comes down, they will say it will further come down. If market goes up, they will say market will further go up. While talking about the P ratio of 28, let me ask you one simple question. First, let me explain what is P ratio for the people who don't understand. If you buy a share of a particular company, if the company is making 10 rupees profit per share, let us say you are buying that share from the market at 250 rupees. So you pay 250 rupees for one share, but that company is making only 10 rupees per share. The company can return that entire 10 rupees to you in the form of dividend, or sometime they may return some money out of the 10 rupees. The remaining money they can use it to expand their business. But anyway, that 10 rupees is actually yours. Whether you receive it or whether it is reinvested on behalf of you, it is your money. Then people say company make 10 rupees per share as a profit and you are buying for 250 rupees. So the company will take 25 years to make 250 rupees profit for you. So that is why it is called 25 PE ratio. So that means in a layman language, the time taken to double your money. You invest 250 rupees, that will always be there. Plus the company is making 10 rupees profit every year. So they make 250 rupees profit in 25 years. Of course, this is a simple interest calculation. And again, assuming that the company is not growing or not degrowing also. So let us leave all those technical parameters. We talk very simple thing. So it takes 25 years to double your money. Let me ask you one simple question. You put the money in bank FD. Let us say it doubles in 8 years. Where there is no risk. There is a zero risk. Why you want to invest in a company that can double your money 25 years? Let me ask you one simple question. You put the money in bank FD. Let us say it doubles in 8 years. Where there is no risk. There is a zero risk. Why you want to invest in a company that can double your money 25 years? Where you are taking the risk. There is a probability of loss also. That looks illogical, right? But markets work like that only. For the people who are asking why 28 PE ratio should be the top, I can tell you it can go up. It can go to 30, 35, 38 also. For your kind information, let me tell you, do you know there is a stock in India which traded at 10,000 PE ratio? And people were crazy. Everybody was buying that share. The name of the company is GMR Infra. In 2007 and 8, all the infrastructure stocks were shooting up like anything. And I remember once I checked, GMR Infra was trading at 10,000 PE ratio, which means that your money will double in 10,000 years. And nobody asked that question. Let me tell you how thing works. Before that, I have to tell you there is something called Rule of 72. Suppose you go and put your money in bank FD. Let us say the bank is ready to pay you 12% interest. Then you want to ask a question. I want to know how many years it will take to double my money. 12% every year, for 100% is about 8.5 years. No, that's a simple interest. If you are taking in the compound interest, the calculation is going to be too difficult. But for that, there is a very, very, very simple formula called Rule of 72, which means 72 divided by the rate of interest will give you the number of years it will take to double your money. So if the bank is offering 12% interest, 72 divided by 12 equal to 6. So that means your money will double in 6 years. Now, about 1 year before, there were many banks offering 8% interest per annum. So 72 divided by 8 is how much? Is 9. So that means the money doubled in 9 years. But stock market, it was trading at 27 PE ratio. So that means my money doubles in 9 years in bank and my money doubles in 27 years in stock market. Of course, still why we prefer stock market? Because the companies don't make the money and give all the money to you, and they will give you only little money in the form of dividend. The remaining money they will reinvest in the company. The company can grow. In future we can get more profit. So we are prepared to give 3 times more to the stock market. Bank FD 9 years, stock market 27 years. We were ready to give 3 times. But today I called a broker and I told him, I will pay you the money. You go and put the money in bank FD pass it on to the exchange as a collateral, and then allow me to trade with FD as a collateral. The reply I got was shocking. Sir, if you are putting more than 2 crore, we have relationship only with HDFC Bank. Sir, for more than 2 crore, FD interest is about 4.25%, sir. For simple calculation, let us take it as 4%. It's going to take 18 years to double the money, because 72 divided by 4 is 18. So, 1 year before, when the bank FD, it was doubling in 9 years, 3 times that 9 years, 27 PEC ratio was justified. Because when the interest rate goes down, people will tend to put the money in stock market. Now, if the bank is doubling the money in 18 years and you give the same 3 times premium to the stock market, why the stock market PE cannot go to 54? This is a logical question. So therefore, many people look at some television channels or read some business newspapers, they look at the past history and they say, no, 28 is the PE ratio is the top. Okay, actually that is not true. Economy will have different interest rate cycles. So now we are moving towards low interest rate economy, and that will have a bearing in stock market. Second thing, when I say markets are likely to go up in future, I say, sir, market is already at the peak. I will tell you, market is just an index, the average of 50 stocks. But within that, there are so many sectors will perform differently. When coronavirus and everything is bad, economy down, everything is down. But do you know that in the last 3 months, how many stocks have hit fresh all-time high? Reliance has hit fresh all-time high. Infosys, TCS, Hindustan Unilever hit fresh all-time high. But after hitting the all-time high, Hindustan Unilever is trading slightly lower. But yet, when the Nifty hit 12,400, and that time I think Hindustan Unilever was trading around 1,800. Now the Nifty is about 20% lower, but this one is trading 2,000 plus. So, if everything is bad, why so many stocks are hitting the fresh all-time high? And that's why I always say the bull market always climb the wall of worries. If you put the money in bank FD, you are going to get only 4% or 4.5%. But I can name few stocks. I am not taking any chota mota stocks. I am talking only about the Nifty 50 stocks. You go and check how many Nifty 50 stocks give dividend yield which is better than the bank FD. One most popular stock every analyst recommend is ITC. The dividend yield is more than 5%. ONGC, IOC, Gas Authority of India Limited, dividend is more than 5%. Vedanta, of course, now Vedanta will be delisted, will be getting out, but it was in Nifty 50 and the dividend yield was more than 10%. If a market is in euphoric stage, let me tell you, you will not be able to find good quality stocks where the dividend yield is better than the bank FD return. Always remember, bull market is born out of pessimism, grow out of skepticism, mature out of optimism, and die out of euphoria. But the stages are one's own interpretation. Most of the people think markets are in euphoric stage. And that is why I am telling you, if it is a euphoric stage, there will be no Nifty 50 stock that will trade with a dividend yield of more than bank FD return. So definitely we are not at euphoric stage. In my opinion, we are at skepticism. Many people ask, Sir, everything is bad. Coronavirus, lockdown, corporate results are bad. Why market going up? The people are skeptic. But then immediately, tomorrow if the Nifty falls by 50 points, you don't call me and sir, you said market will go to 15,000. Why the market is falling by 50 points? Stock market do not go in straight lines. It will be moving in a zigzag manner. But in the long term, the markets will be moving higher. So do not believe what other people are saying. You do your own analysis, and there are always good stocks to invest for long term. And I suggested Reliance Industries 2 to 3 months before, and I also bought, and you know what is happening. I've been making very good profit. So if you have not watched that video, you can just click on the link here. And very soon I will be coming out with more investment ideas and stock analysis. So until then, goodbye. Thank you.